Well, good morning, everyone. Thomas Montgomery. It's a beautiful Monday morning. It is August 30th, 2021. And we have a really important topic today that has a couple layers to it. So hang in here with me. Let me discuss what we have on the agenda, and then we'll dive into your questions, comments, or concerns. So layer number one is the fact that we wanted to make it easier for those of you that wanted to leverage the funding proposal model to be able to drive in prospects. And so really what that means is on fundingproposal.online, we have added a referred by field. So if you want it just super simple to drop people's name, email, phone, put your name in here, hit submit, then we'll take it from there. So that is fine. Just keep in mind that then our staff is going to send them the funding proposal application. They'll enroll in most cases then with in the access to capital used in our standard template, our normal agreement. And so that would not be a good fit if you're a white label partner wanting to enroll these clients in the white label model, because now you're not servicing them, you're not controlling the contractual terms. So you might say, well, that doesn't solve the problem. A number of you really like this marketing approach of, hey, just get a funding proposal. So what you can do is you can work with Scott, our chief marketing officer, or on your own, it doesn't matter to me, and you can create essentially a landing page similar to this, and then control the input and get them contracted off of your landing page, and that's perfectly fine. So again, you can create your own landing page. It's white label, have best practices for your landing page to allow them to go ahead and accept the terms and conditions and get enrolled, and then they're really to us just a normal white label client. Or if you're looking for the simplest way to make money, the simplest way to help people would be to simply go to fundingproposal.online and just simply put in 4 pieces of information. So that is layer number one. Layer number two is, let's talk a little bit about the funding proposal. So the purpose of the funding proposal, it's a 1-page application that gives us enough information to identify where their first tranche of financing, their first round of capital should come from. And that'll vary from person to person, from circumstance to circumstance. I'm going to talk off of these bullets, which I believe are pretty much what's on the flyer that we use as well. And let's talk about each one of these. Keep in mind, not everyone's going to qualify for all types of funding. That's why we need to get them to complete that application so we can figure out what is right for their mitigating circumstances. We do go out on a limb and say, we can get anyone at least $20,000, a $20,000 approval, but we need to really talk about that and understand that. So let me pull back up the screen that just left us there. Okay, so number one, there are different types of capital, including term loans. And I almost thought about putting together like a vocabulary sheet. I didn't have time to do it. Maybe I should. But term loans are loans that are made for a specific period of time. They're specific payments. And they could be 10 years, 20 years, 3 years, 5 years, but they have set payments. Think of car loans as being a common example of a term loan. In contrast, also what we could be recommending from the first tranche of financing, for the first tranche of financing, are revolving accounts. We really love business credit cards. I know I just got mine last week, a new one. Most of you probably have business credit cards whereby they're typically 10,000 to 50,000 credit limits. They are under the EIN. They don't report on personal credit. So business credit cards are examples of revolving accounts. credit lines, and then lines of credit. So there's all different types of financing that might be available for their first tranche, and certainly as we work through their entire capital raise. I think we're all comfortable with that. Different sources of capital for different circumstances. We need to see what's best for the client, what they qualify for, and of course, what they want. Secondly, we talk about EIN only financing. And so we often call that business credit. We just had our in-person training on Friday at the country club. A bunch of you came in and we had a really good time together. Awesome lunch. The country club set up a buffet. But the bottom line is we talked a lot about business credit. I think you all are probably somewhat familiar with business credit. The concept there is it's off of the EIN. There are loans that are SBA guaranteed and those that are not, and there's different types of SBA loans, which we talked about the training Friday. So again, what you shouldn't be doing is making promises to the client of, oh, here's the financing that you'll get. What you want to do is say, hey, we've got a great program, guaranteed results, there's no risk. Let's get you enrolled and let's see what you qualify for. And these are examples of what they might qualify for either now or after we built their loan package. This is the one that's getting the most questions. So we're going to dig into this. And this is another layer of our discussion today. So for people that don't qualify for cash funding, that is not a negative reflection on you, certainly not on us. You know, some people, based upon their decisions and or their life circumstances, don't qualify for cash funding at the time of enrollment. And so that's okay. We put our arms around them, we love them, we embrace them, we encourage them to enroll, and we want to work with them to help them raise capital. And we guarantee everyone at least $100,000 capital raise per the terms and conditions of our program. So let's say that you have someone that is just not credit worthy or does not have any demonstrable income, because we all know the 3 C's, right? We've talked about these ad nauseum. If you want to borrow money, you have to either have credit, collateral, or cash flow. Now, the more of the 3 C's you have, the better, but you have to have at least one of the 3 for traditional funding. Well, what's an example of an alternative? A secured loan. And that's not what we're talking about here, but we're just building up to it. Could anyone go to their bank and get a secured loan? In truth, no. We see that most banks still apply underwriting criteria to issue a secured loan. How crazy is that? It's like, bank, I'm willing to give you $1,000 of my money for you to loan me $1,000 so it can report on my credit and I can start building positive. And we've seen many people decline for secured loans, as insane as that is. The other detriment of a secured loan is, of course, you're putting typically dollar for dollar up as collateral. So if you wanted $1,000 loan, you would have to pledge, essentially give the bank $1,000. And so that is not feasible for many of our clients. When you combine the fact that we need to not just have new positive, let me restate that, beyond the fact that we don't just need positive credit reporting to build our access to capital, our fundability, the size of the trade lines that report on our credit make a difference. So let's say, for example, if you went to the bank and got a $200 loan, or if you went and got a $20,000, which one do you think has the greatest impact on your future borrowing capacity? The $20,000, because it demonstrates that you've been responsible in paying and managing a larger amount. Same with car loans. If you don't have strong auto credit and you go in, they probably won't finance you for a $120,000 Mercedes S560. They probably won't do it. Because it's like, well, you've not demonstrated that you've paid big car loans before. We're not going all in on you on a $120,000 sedan. So you might have to get, a $50,000 C-Class or whatever there is there in that price range. So what am I getting to? So credit builder loans fit a specific need. Some people like it, some people don't. It's an alternative to secured loans. And with our credit builder loans, we work with a third-party financing company, so it's not some sort of internal deal. Reports on the credit, so it builds credit, it shows positive payment history, and it's not secured. There's no credit check. And that's not an exaggeration. That's not a marketing spiel. That's not deceptive. To get a credit builder loan, there is no credit check and no verification of income. Well, we got to keep applying what's rational here, right? So does that mean that anyone can get a cash disbursement loan without a credit check or verification of income? Of course not. That's too good to be true. But what they can get is a credit builder loan, not a secured loan. They can pick the amount. It can be as little, frankly, as $300. It can be as much as $20,000. It's automatic approval, so there's no question about that. You need to be a US-based citizen, of course. And with that, then the person gets that trade line, starts reporting on their credit. That's why it's called credit builder. And then once they have paid it off, then they get the cash distribution. So there's the catch, right? A normal loan, you borrow it, and if you're credit worthy enough, you get the money up front, and then the lender takes the risk that you'll pay it back over time. That's obviously what you and I want to be focused on. There are some people that are not credit worthy or don't have enough income, verifiable income yet, to get a normal cash disbursement loan. So an option is a credit builder loan where they do get whatever amount they select from $300 to $20,000, but it's dispersed after they have made all the payments. So it's paid in arrears. Well, that's not as good as advance. Well, of course not. If they qualify for advance, let's do that. But this is great for those individuals that need to build their credit profile, and it's a true primary trade line. I was having a discussion with one of you this morning. There's a lot of fuzzy trade lines that are out there. I wouldn't touch them with a 10-foot stick, because you know what happens if you manipulate your credit profile and then go use that to apply for financing? And if the lender perceives, well, I should say, if the courts perceive that you have fraudulently manipulated your credit to apply and get approved, that's fraud. You could go to jail for that. So what we're talking about here is a true trade line. Is it the right fit for everyone? No. First of all, people that qualify for cash funding, we should do that. That's better for all of us. But some people need to build before they can get cash funding, and this is an alternative to a secured loan. Moving on, the Chapman Fund is great. It goes from $30,000 up to $250,000. So we get a lot of scrutiny, a lot of criticism. Hey, why don't they go to more than $250,000? Why can't they give me $500,000? Why can't they give me $1 million? Well, it's the way it's set up. It's from a taxing authority, doesn't come from a bank, and it's only up to $250,000. So I understand that a lot of you will refuse it because of that, but it's easier to get, and it's another source of funding. We can also facilitate equity-based financing. We have a number of clients that we're currently working on equity-based capital raises, and those are nice because it's not contingent upon any of the 3 C's. You don't have to have credit, cash flow, or collateral to get equity-based financing. It can be a very, very large amount of money or small. So it's a different type of capital. It doesn't have to be paid back. It's not a loan. So the same scrutiny that is placed on getting a loan is not placed on that. And of course, there's other options. Okay, so what we've done now is we've covered 2 layers. Number 1, we said, hey, if you're just looking for the simplest way to feed prospects in, we've changed, essentially we've added this field. So you can just drive people to fundingproposal.online, or you can just dump in clients. Hit submit, our staff will pick it up, get them contracted, and you'll get paid. If alternatively, if you want to leverage what has turned out to be a remarkably effective approach, kind of pitching funding proposals as a way to get a client into the system, you can also develop your own landing page or work with Scott, our chief marketing officer, and create one that's similar, or it could be different than this, but it would function like this. So it's using this pitch, and then you're gathering people's information. You want to gather with the most minimal amount, hit submit, and then you want to then make available to them usually the terms and conditions off of your landing page. So there's three things that we know that result in high performance. Having a good landing page, which you can create your own, or Scott can create one for you. Secondly, is having terms and conditions online, so the clients can very easily get enrolled. They don't have to jump through hoops or wait. And then the third is some sort of drip campaign, because what we know is not everyone will convert when first exposed to something. So you want to have built-in reminders. It could be emails, text, or I guess even phone calls. Try to avoid phone calls because those are the most laborious. So do you have to have all that set up to be successful? Absolutely not. If you want to be a really high performer, I think you need those three things. Some sort of a landing page similar to this, or whatever you want it to look like. Second would be the ability for people to agree to your terms and conditions online, so that it's not laborious, it's easy for them to do. And then third is some sort of auto reminder system embedded that, for example, if they filled out your form, but they didn't go on to step 2 to agree to the terms and conditions, the system's automatically reminding them and prompting them, educating them, and helping them understand the benefits of moving forward. Okay, so I want to open it up for the questions that each of you may have regarding these layers. The first layer is, we want to just drop people in here now. We've added this field so you can do it next to no time and effort on your behalf, and we'll take it from there. The second point was making sure that we have a better understanding of the different types of funding, especially understanding the role and the functionality of credit builder loans, so there's no misunderstanding. And then the third is currently encouraging each of you to set up a landing page, put your terms and conditions online so it's easy for people, and third, have a drip campaign for those that don't convert. Okay, so let's getting into your questions. Adam says thank you, and you're very welcome, Adam. Magnus asks, are the terms and conditions the same as a client agreement? Yes, and I'm sorry, those are interchangeable. Normally, we'd call it an agreement if it's being sent by DocuSign or Adobe or some freestanding. Often it's called terms and conditions when it's more of an online acceptance. Yes, I agree to the terms and conditions, but you're right, Magnus, they're one and the same. And we've provided you recommended terms and conditions, right? So if we go over here to IIMFL, we go to the white label page, and we've given you right here, if you click on them, they're editable Word documents, recommended templates to work off of. Now, you don't have to use these. We certainly do recommend that you use written agreements versus oral, and we'll probably have a deeper discussion on why later this week. But yes, terms and conditions, client agreements are synonymous. John's asking about when. And John, I'm expecting a big month out of you, buddy, in September. So let me know what we need to do to help you drive in some material volume. But John's asking about reporting. So the credit builder loan reports just like other extensions of credit, where it reports monthly. And yeah, for the Dion's asking about first tranche of financing. We'll go back over here. So what I encourage you to do, and maybe this is more difficult than what I feel like, just keep in mind that you shouldn't be setting client expectations of what type of funding they're going to get, because we need to go through the process. And the process starts with the one-page application to get an initial funding proposal for the first tranche financing. And then we need to build the full loan package to figure out where we're going for the rest of the capital raise. And without that data, I think you could be very dangerous that you start setting expectations of, oh, well, we'll get you a $250,000 Chapman Fund allocation. Well, will you? Or we're going to get you an SBA 504 loan. Will you? We don't know those things up front. We have to build out the client file, build out the loan package. Now, I understand that clients want some certainty. So, letting them know that the process has a guaranteed minimum $100,000 capital raise. That's true. That's in writing. That we can get them at least approved for $20,000. That's true. But keep in mind that $20,000 that could be guaranteed would be the credit builder loan. Now, do we have other clients that get $20,000 of cash funding? Of course, but we need to see what each person qualifies for. So helping people understand what is available is fine, but committing to something specifically, I think, is deceptive, because until we've gone through the process, you don't know. All right, Dion's going to start submitting clients. Thank goodness, Dion, you've been with us for a while. We're excited to see you help some more people this month. All right, Mr. Jackson. Mr. Jackson, thank you so much for coming up to training on Friday. It's great to spend the day with you. So he's asking, so as a white label partner, there's not a default landing page, and you're a white label partner. Now, so you could do one of two things. If you didn't want to do anything, you could just use our landing page and just drop people in here left and right, but then they're going to be treated as an affiliate referral. If you want help setting up a landing page, you'd get with Scott, our Chief Marketing Officer. His email is Scott, spelled normally, SCOTT, at smartmoneyalliance.org, and he can help you with that. Or you can just go set up your own. Many of you have that competency. But as a white label partner, there's not a normal landing page we give, because that's almost like an oxymoron, right? As a white label partner, we don't know what the message is that you're pitching exactly, nor do we know how to brand it to your needs. So as a white label partner, there's no cost to be a white label partner, but and you can mimic what we've found to be very effective with a landing page, but we're not creating one for you unless you work with Scott and figure that out between the two of you. Okay, let's see here. Mr. Ross is asking about commission payouts for white label partners. Well, the beauty is, as a white label partner, the client pays you. So there are technically there's no commissions, a little bit of wordsmithing here, for white label partners, because you're paid directly by the client. You get 100%. Now, as a white label partner, the concept is we do 50-50 split off the revenue streams, but for almost everything, you're paid directly, Mr. Ross, as a white label partner. So you're not waiting around for some commission distribution. You're paid in advance. Barry asked a good question about the credit builder loans. And so, they're set up, it's a financial agreement that they're making. They would decide the term. And if I recall, I think it can be as short as 3 months. I know the maximum is 48 months, but it's up to the client what repayment terms that they want. So they're controlling how long they have to go until they get access to the full amount. But Barry's asking if they dispute that, and I don't know how you dispute a loan. I'd have to think about that a little bit. But yes, you're paid. Your performance fee, and this is for Barry and everyone else, you do receive performance fees off of all the different types of capital. So, and you set what the performance fee is, whether it be 10%, 20%, more or less. That's up to you all. All right, let's see. Helen asked, and Helen, also thank you very much for coming in for the training on Friday. It was a pleasure to see you and spend the day with you. And I'm not sure what you're asking. Do you have e-signal? I don't know what e-signal is. So I apologize for that. Adam asks, once the client fills out the easy form for the free funding proposal and hit submit, will they need to submit out the contract to make them liable? Okay, so if you submit in a client, Adam, as a white label partner, those clients are already contracted with you, and we're sending them the one-page funding app with the cover sheet. If a client is not already, if a client comes to us not through a white label partner, in other words, they're not already contracted in most cases, then we'll send a different version of the Adobe packet out that has the cover sheet, the application, and the terms and conditions. But if you're enrolling them yourself and getting them committed to your agreement, we don't need to contract with them again. Okay, well, I think that covers the basics. I have to run to an appointment here, so if there's other questions, let us know individually. We're having an incredible month in August, and well, I'm sure together we can do even better things in September. So thank you so much for your time today, and we'll see you back tomorrow morning. Bye-bye.